For tonight, and he will take over. The gentleman's name is Steve Caravella from Scotland. Fuller Lowenberg. Names are tough on me. I must be getting old. But in any case, let me stop right here before I really screw it up, and I will introduce Steve. Steve.
Thank you very much. Welcome, everyone. I don't know if I'm going to need a microphone. I talk pretty loud. Can you hear me in the back? Yes. Okay. I'd like to talk to you just for a moment and with some opening remarks. And as members of homeowners associations and board representatives, I need to say that boards and homeowners associations, at the homeowners associations, the possibility of fraudulent activities exists in every association. Community associations of all sizes throughout the United States have been ripped off by clever thieves. Embezzlement can range from a few $100s to millions and can be perpetrated by a number of different individuals. That's the first part of my conversation. The second part is, but as board representatives, what does it mean to you? Well, if there is a situation of fraud detected within your community, you guys are faced with a triple whammy. Triple whammy is the financial loss. Next, the association members, those representatives of the community and those homeowners, have to deal with a betrayal of trust. And finally, the third comes from the nagging realization that this theft could have been prevented. This evening, CAI has a panel of experts to talk with you and discuss the types of crimes that have been happening in different communities and the best defense you can take as members of the board. It would be my pleasure at this time to introduce the members of our board. Sitting directly to my right is Ms. Maureen McCormick, Esquire. She's the Bureau's Chief of Economic Crimes Unit of the Suffolk County District Attorney's Office. Immediately to her left is Thomas Lowenberg, CPA of Fuller Lowenberg Co. To his left, we have Woody Goldstein from Mayer and Company CPAs. And to his left, we have Richard Cola, CPA of the Office of Richardson Cola. To his left, James Sutton of the James Sutton Agency, and to his left, Robert Plank of the Capital One Bank. At this time, I would like to turn our discussion over to Maureen McCormick for a discussion of economic crimes affecting condominiums, co-ops, and homeowners associations.
Thank you. Sorry, I'm a lawyer, I gotta say. If you remember nothing else of what we talk about here today, you have to remember your goal as homeowners is to try to prevent fraud as best you can. You're never going to completely prevent it, but your key is to make it as transparent. If anybody wants, the more people who can see your books, the more likely it is somebody's going to catch something wrong. And two, the second thing is make it as difficult as possible for people to steal from you. Even if you can't prevent it, you're going to catch it more quickly, and you're going to make it easier for people like me and the detectives that I work with to prosecute it. There are many different methodologies that you can use to make it a little bit more difficult, and I know these gentlemen are far more qualified than I to talk about things like redundancy and transparency and bifurcation of duties and things like that. Do what they tell you, okay? Back when I started, when dinosaurs roamed the earth, the corporations would have the big checkbooks. Remember the big checkbooks? You have to check the stuff. What you're going to see in your associations is embezzlement for the most part. Somebody in charge of the money or somebody who takes your money in and steals it. There's a number of different ways they can steal it. I'm just going to give you a couple of examples because we really don't have a tremendous amount of time. And then I'm going to talk to a little bit of, if you discover it, what you should do. But embezzlement, there are many, many different forms of embezzlement. I lecture on it all the time. I could take up this whole time just talking about it. But things we see with your kind of associations are, again, the check, because I'm older, and I like, remember you have the stub and the long check. A classic embezzlement is the stub would say one thing. a payment to something that would be normal for your association. The gardener, the guy who empties the dumpsters, things like the painter, etc. And so the stub looks fine, and when the accountants go and look at the books, the stub looks fine, it's a legitimate expense, the books balance. But if you actually got the actual check, the check is not made out to Acme Waste Company, it's made out, if they're stupid, to the embezzler themselves. Sometimes, another little permutation on that is, it'll be made out to something that would look reasonable, again, your gardener, your dumpster guy, whatever. But it's not your dumpster or gardener guy or whatever. They will form a corporation and a bank account and write a check, and again, the auditor goes through it, looks perfectly legitimate, and it isn't until you guys bounce a check for something, you realize, what do you mean I don't have money? We have all these fees and we bounced a check, that's impossible. Then you need to do a forensic audit, which is something very different, and again, I'll leave that to these gentlemen. So embezzlement, so checks and balances, that's what we see. We have a couple of homeowners cases where, you remember the old Saturday Night Live routine, your baseball has been very, very good to me? Cash is very, very bad for you. Cash is bad. Cash people steal. Cash I can't trace, and you are out of luck. Cash is very, very bad. Don't take cash. Personal checks are the best because I can trace those. But we had a case, it was a homeowners association in a retirement community, in a modest income community, and many of the people didn't have access to those bank accounts, and they often paid by money orders. So this person would take the money orders and change the payee and deposit them, or double endorse them and deposit them. And the homeowners association's bookkeeping was so horrific, we could almost not make a case. If I can't tell what's supposed to come in, I can't help you. So if you can't do it yourselves, hire somebody who can, and then watch them. The other one we had, this guy is a certified public accountant. This is in a case we have going on now. He would go in, and what he would do is, I want to make sure I get this right, when people would pay, some people would pay in check and some people would pay in cash, and the monthly fees would go into one account. And then that was when it was supposed to be deposited, it was moved from that account to another account for deposit. What he would do is the money would come in, and he would take the cash, and when it went over to the deposit account, he would put the checks in, he would keep the cash. But he would log in that everybody paid, because you don't want your homeowners getting done, because then they'll say, of course I paid you, I have a receipt. So now in this account, he logged in, say for example, 5,000 went in, and 1,000 is in cash. He only moves 4,000 over to the deposit account. He has that extra 1,000, and he would do ledger entries and ledger it out, changing that old checkbook stuff, change it to something else, and hide it in different accounts and pocket the money. My point is, when I first started in this line of work, my chief assistant told me, trust nobody. That's words to live by. Don't take cash, and don't trust anybody, because given the opportunity, people will often try to steal if it's easy. So avoid cash, have checks and balances, do what these gentlemen tell you. Now, let's say you discover something's wrong. What should you do? Suffolk County is divided into, in the western 5 towns, into police precincts. There's 7. Basically, the odd numbers run across the South Shore, the even numbers run across the North Shore, and the 7th kind of encompasses Brookhaven, parts of Brookhaven, which is North and South Shore. On the East End, they have their independent police departments, but no matter where you go to your local, your local police agency will have detectives. Detectives investigate felonies. And so call them up and make an appointment. But don't just show up and say, we've been ripped off. You have to bring them something. You need to bring them your records, your bank statements. If you suspect that checks have been, some of your homeowners' checks have been misappropriated, the fronts, the backs are more important. That shows me where the money went. You might give a little written synopsis so they know what's going on and they can follow it. So the police departments will investigate it. The arrest is made, the attorneys in my office will prosecute it. That being said, if it's a very significant, and not that it's not significant to you, but in monetary, if it's over $50,000, or it involves a fraud that crosses precincts, a scheme of some sort, then we will take it in-house and investigate it. We have both Suffolk County police detectives who are assigned to what used to be called the DA squad in my office that I supervise. And we also have something called detective investigators, which are employees of the district attorney's office, and their cops, guns, badges, just like anybody else. Many of them had retirees and retirees, you retire after 20 years in the police department, from other jobs. They come from the troopers, the Nassau County PD, the NYPD, federal agencies, all very good at what they do. If that's the case, if it's over $50,000, then you could contact the district attorney's office in Hauppauge, and it's, I think, infoda@suffolkcountyny.gov, or you can just call and ask for the Economic Crime Bureau and ask for the intake department. But before you go, come with something we can look at, all right? I know I have very limited amount of time, and I know there's a lot of speakers here, but I just wanted to give you, those are some of the types of frauds and embezzlements that we see in the DA's office. And the things you can do to prevent them is do what these gentlemen tell you. And every once in a while, make sure a third party looks over the books. Thank you.
Last comment Maureen made, I've had the opportunity to work with some of her investigators in her office, and they are outstanding. They go full hill. Without any further ado, at this point, I would like to turn our conversation over to the three CPAs on our panel, Woody Goldstein, Tom Lowenberg, and Richard Cola, who will now discuss the first lines of defense in preventing fraud. Woody?
The one thing I hope no one in this room ever has to do is call Maureen's office. She provided us with some real-world examples to make it crystal clear to us that fraud could occur in our own types of communities. Our firm has certainly come across that. We got to do a forensic audit for a community, and we saved, with their lawyer, we saved them tens of thousands of dollars. And what that person did was similar to what Maureen was talking about. It had to do with the reserve account. This board member treated the reserve account as though it was her own money. And through a creative system of journal entries and fraudulent invoices, pocketed all the money until someone got a hold of the bank statements, which I know either Rich or Tom are going to talk to, and found out that the money was going to the wrong place and wrong person. By a show of hands, how many people here are property managers, property management companies? Okay, by a show of hands, how many people are board members? It is great to see that so many board members want to come down and, as one of my friends said, learn how to commit fraud. We're going to help you. I don't take credit for that, Joe.
Significant is 50,000 plus,
gets
right?
credit for that. But the one thing I want to impress upon you, and I'm not an attorney, but everyone, and I'm on the board of my own community, we are all fiduciaries. And by way of definition, a fiduciary has the obligation to act, and who is entrusted with the care of money or property, and has the obligation to act in the best interest of that person. In the case of an association, it means that we have to act in the best interest of the association and each of its members. Perhaps the most important fiduciary duty is your financial management. And that's what we're going to talk about tonight a little more. Decisions must be made on an informed basis in the honest belief that any action you're taking is in the best interest of the homeowners association. If a decision comes up that affects your personal property, I know what the attorneys are going to say. They're going to say recuse yourself from that decision so that it doesn't have any sound or look of impropriety. For example, another example is if you have to apply all the rules evenly. If one of your friends is past due, well, we know we have to collect the dues to pay the bills. You have to collect it from everybody. If that same person or similar person is violating the rules, you must make sure the rules are applied evenly. Otherwise, someone's going to have a defense and say the board does not do their job correctly and they're not carrying out the fiduciary duties. The cornerstone, which we're going to talk about a little more, of managing the association's finances properly, is an effective system of internal control, both at the board level and if you use a property manager at the property manager level, or if you have your own office on site, make sure that you have internal controls there. One of the things that you should do is review your board reports every month. Come to the meetings prepared to act. Come to the meetings with questions, make sure you get answers promptly. And Richard, Tom, and I hope to impress upon you that internal control is the most effective way to prevent fraud. In the financial statements or in the board reports, what we would suggest you look at, and these are just some of the points, would be look for vendors who are not on your approved vendor list. Look for payments to contractors, although as Maureen said, if a person really wants to steal the money, they're gonna make the check out. It looks like it's to somebody that you know, but it isn't. And we're also gonna talk tonight about who opens the bank statements and reconciling them. We as a firm, and I think Richard and Tom would agree, we recommend that all bank accounts be reconciled every month. That's a surefire way to make sure that people are not getting away with your money. And on the issue of money and collections, we don't take cash. We recommend no cash also. Bob Plank is going to talk about lockbox, which is probably the most effective way to control and make sure that all of your collections are coming in from everybody and it's getting into the bank account properly. Reserve funds is something we're asked about from time to time. Don't commingle your reserve funds and your operating funds. It makes it easier for somebody to commit a fraud, but more difficult if they're kept separately. Make sure that 2 people on your board approve all wire transfers in or out of an account, that 2 people are signing checks, and that as far as the reserves are concerned, make sure they're being used for the specific purposes that they're set up for. At this point, I'd like to turn it over to Tom, and then Rich will also have some help for us to make sure that we can avoid fraud in our communities.
Thanks, Woody.
I just wanted to touch upon a few items. Woody's talking about internal controls, and some of the specific internal controls that we always impress upon our boards are the dual signatures. Very, very important that 2 board members signing all checks, not the management company. And one of the other issues is sometimes the board members going out of town, so we sign 6 blank checks. That doesn't help. Dual signatures on all checks. Check comes to you, it should be a blank, should have no signatures on it. That's one of to me that's the first line of defense. The other item, again, Woody touched upon, was bank statements. A board member should be opening the bank statements, not the bookkeeper, not the accounting firm. This, again, another line of defense. You open that bank account and you're going to scan it to see who the checks are payable to. Today's electronic age, we see it all the time now. We've been involved in several fraud cases where you can just take that, the bookkeeper can take that bank statement, scan it in, and change anything they want, and put it right back in the bank statement, and no one's really going to notice it. Not that I want to tell specifics, but
Give us
that
ideas.
aiding and abetting?
Oh, there's an idea.
I mean, we had a
This is
situation.
being recorded.
Okay. Not that I want to teach you everything, but one situation, the bookkeeper had a gambling habit. So there's things you can look for, or people saying they go to Atlantic City every other weekend. Should just raise a little concern. Not that I'm saying it does happen, but this individual was going to Atlantic City with the association's credit card, and when the bank statement came in, she scanned it in. Of course, if you saw it, it would have said Harrah's, right? There was a debit from Harrah's from American Express, but basically she could scan it in and type right over it, and then it was made out to American Express, Home Depot, or so very easily done. Another situation is just changing the checks, as Maureen had alluded to. We had one situation where it was erasable ink. That was when checks were handwritten. So they always had a manual checkbook, just in case. So the check was made out in erasable ink. So when the board signed it, it was made out to the landscaping company. But when the check went back into the individual at the bookkeeper's office, it was changed back to her name. They cleared the bank, which was erased again and made out to the landscaping company. So I'll try that. So there's so many different ways. So opening that bank statement, and use your accountant to, because I've had board members that say, okay, great, I don't even know what I'm looking at. So use your accountant to, they'll go through it with you, what you specifically should be looking for. Some of the banks don't return the checks to you now.
Make copies.
Okay. Bob will touch upon that. But you need to take a look at those canceled checks. Another thing is conflict of interest. I always suggest to the boards to have your board members sign a conflict of interest statement annually. Granted, your bylaws, your rules are going to say you can't have any conflicts of interest. And that's great, but when you have to sign an affirmative statement, it's a big difference. I think right now the Attorney General's office, with respect to not-for-profits, require a conflict of interest policy for all not-for-profits. I think that just came down. And they want to sign documents. That's something that's signed over the other day.
Oh.
So they're
Those are my
looking
friends
for
in the AG's office.
New York
501c3s.
State, yeah. So for someone to actually have to sign that document, it's different than saying, yeah, okay, I know there's rules against conflicts of interest. That, you know, the landscaper isn't my brother-in-law. My daughter doesn't work for the landscaper, etc. I think you get the gist of what I'm suggesting. I think I'll leave some of the other stuff for Rich before I run down my whole list.
Okay, sounds good. Okay, I basically want to go over, I'm sorry.
All yours.
I just want to go over some items to combat fraud that everybody is discussing. Some of the items are like prior to signing checks, authorized check signers need to review invoices and supporting documentation. You always want to look at originals, not copies. You also want to verify vendor invoices for accuracy and quantities ordered and received and the proper prices being charged, and just overall clerical accuracy. I once did an audit where a fuel delivery was sent to a location other than the cooperative's address. Invoices should be stamped paid to avoid duplicate payment. You want to always look for missing or altered financial records like everybody has been speaking about. In addition, I once saw an employee that was changing the digits on checks. So the checks were changing every so often. It could be $20, you know, but if you take 20 times, you know, 30 transactions, before you know it, it adds up to a much larger amount of money. You also want to look when you're auditing for any larger unusual transactions in the books. Never make checks out to cash. You don't want anything, checks, like Tom was saying, any blank checks signed in advance no matter what. You want to have access to checks by password on all the computers. And any voided checks, you want to deface them and store them and keep them on file. You also want to set a limit on invoice amounts that can be paid without full board approval, or if you want to, like Tom was saying, have double signatures. That's a really smart way to go, and then you have no chance of any kind of problems. The other thing, if we talk about debits or credit cards, what I can mention is you definitely want to, if people on the board have access, you want to set low limits on the credit cards that they could use for, like, if it's Home Depot or any facilities like that. In addition, the receipts that support the credit card need to be matched up. That's really important. Now, the other thing is you want to hire a really good team of professionals to work on, you know, the whole, you know, association or condo. You want to hire a CPA familiar with accounting and auditing standards published by the American Institute of CPAs, so a thorough audit or review can be, you know, take place. In addition, the accounting financial audit should be reviewed with the board of directors and any questions answered. And I think Woody was mentioning the importance of monthly financial reports being reviewed with the board of directors, like the management packets. You can look at things like the bank reconciliations, bills that support the bank reconciliations, old outstanding checks on the bank recs, just in case there's something there that does not look proper. The monthly packet that you're getting from the management company, you should have a balance sheet, you should have an income statement, you should have like budget versus actual, so these numbers can be compared, and then if there's a problem or a major fluctuation, it could be discussed or investigated. At this point, if anyone has any questions for me.
Well, I think we'll hold
Wait,
questions
yeah.
until the
Oh,
end.
for the end? Okay.
Rich, if you finished? And I'd
Yes.
like to have Jim Sutton talk about insurance.
Well, the good news is there is insurance for crime coverage and theft of monies and what have you. There's some policy requirements that I'll talk about in a minute, but generally speaking, it's just an area where you need to total up what you have in your bank accounts, generally speaking, 3 months worth of assessments, and then whatever is in the reserve account. You really need to take a look at this. Oftentimes, I do meet with people, and there's a concern about how we come to that particular limit. The FHA does require that, by the way, 3 months of assessments and then the reserve account. So it's usually relatively inexpensive in comparison to your other policies. A very small percentage is usually the cheapest policy that you do have for an association. So I wouldn't be afraid of getting the appropriate amount of coverage for your particular association, because you just never know. It's very sad when this does happen. There's a loss of trust with whoever stole the money. People counted on these people to be reliable, and they place their faith into these things. It's also very sticky. People have to report the crime to the DA or the police or what have you, and I mean, there's some really sad results that come out of this. And so these controls in place can, really take care of some of those issues that will pop up. And they will pop up, believe me. I've had occasion to pay these claims, and I've had people oftentimes employees, they carted off to jail for a few years. And usually there's a family that's been destroyed, sometimes kids involved or what have you, and no mom, for example, for the next few years. Not an easy thing. And a lot of times people are very reluctant to go down that path. The coverage doesn't necessarily require an arrest. Sometimes these people are gone, you can't find them, so the companies will pay. But it's also something that oftentimes if they do catch the person, that's what's going to happen. So let me just go through some of the high level, just from a 25,000 foot level. We're not going to get into too many specifics, so I don't have a lot of time here. But there's basically 8 coverage parts. There's employee theft. That also includes the property manager. So any employee that's working on behalf of the association. Any forgeries or alterations, checks is covered. Inside the premises, theft of cash, money, or any type of what they call securities. Also, robbery. People are held up or what have you if somebody sticks a gun in your face or threatens you, that's what they call robbery. Safe burglary is actually a burglar type of event, and oftentimes burglary is described as some kind of effort to break something, to get into something. There's outside the premises where really monies are just not on premises at that point, or some kind of fraud takes place off premises. There's computer fraud, big issue today. Everybody knows that the internet and lots of things that people are doing with computers are, it just could be just about anything. I've had some crazy things also with people from overseas tapping into people's accounts, and maybe Bob could talk about that a little bit more, but that's more and more, you see that. Funds transfer fraud, in other words, transferring funds from one bank or one account to another, or somehow in that whole process, fraud takes place. It's transferred into the wrong account. And then money orders and counterfeit money that people are passing off. So those are the 8 coverage parts that are part of it. And a lot of times people remember fidelity insurance. Well, fidelity has kind of been eclipsed by it. This is now, they call it crime insurance. So in the old days it was fidelity bonds or position bonds or something, but they've kind of changed that, and it's really more crime insurance today. So that's the common term with insurance. I had a list of all the things that, and most of these are what I was already mentioned, so I'm not going to talk about those. And really, that's about it. I don't have much to say other than 2 signatures. I did want to read something about some of the requirements of the insurance carrier. Oftentimes, when you apply you want to have a claims-free position for the past 5 years. If you don't, then we have to talk a little further with the carrier. But just getting a coverage right away. Claims free for the last 5 years. Fee mortgage payments are always received as checks, not cash. People mentioned that earlier. Counter signatures are required on all checks over $500. That's one of the requirements. Vouchers supporting records are stamped paid when checks are signed. If records are kept electronically, there's a system in place to indicate that a check has been issued and is preventing some kind of duplication. Anyone authorized to fire or hire association employees is prohibited from distributing payroll. And if there's no payroll, you're not doing payroll, then it doesn't apply. The association's bank account and credit card statements are reconciled monthly by someone not authorized to deposit, withdraw, initiate electronic funds transfer, or to use an association's credit cards. And volunteers other than directors and officers are prohibited from handling bank accounts or fee mortgage payments. And these, one of the other things is that this particular carrier does not want more than 25 employees. This is one company for an association. So that doesn't fit. A lot of times people do not have that. But those are some of the requirements that most of the times they want to see that some checks and balances are in place, so that they know that they have a good risk.
Thank you, Jim. Now we'll have Robert Plant to discuss the safeguards the banking industry can help relative to minimizing the opportunity for theft.
But let me just tell you, the hot button now for most banks, Capital One Bank being, is fraud. And so if you think about every single bank probably has a separate designated fraud department with a bunch of ex-detectives, which is great. But anytime you have fraud, we're always going to set up a case. And they're going to go through a whole research, get a police report and so forth. But it's so prevalent now, and it's such an important facet. I think as homeowners associations, you really have to be aware, not just embezzlement, but just about any type of fraud. You had mentioned overseas, any place. But take a check. What's on a check? Just about everything, right? You check your account, the routing number, the signature, the address, everything. So they can take that check and not only change that up, but they can also set it up on an ACH type basis. And you're going to have some major problems just with that. So there's different ways a bank can kind of help prevent some of the fraud. I'll just give you kind of three. One's lockbox, positive pay, and then just the typical online checking the accounts. So lockbox, for the most part, you're going to see the property management companies take care of that. We'll set up a post office box for you, and all the deposits are going to go to that lockbox. We'll take care of doing the transactions, making the deposits on maybe sometimes 6 to 7 times a day. It cuts down on, for a property management company, cuts down on an additional staff member taking in from their office, but it's a third party, a bank, taking that invoice, depositing those checks, which helps with the fraud. It's a little more expensive, but again, property management companies are the best ones to set up. There's also positive pay, which is a pretty good item, which if basically we're going to just match what you are sending out. So you're going to send us a file each day of every check that you're going to write out. We're going to match it with what comes into the clearinghouse. If something doesn't match, it's either you forgot to put it down or it's fraud. And so they'll give you a window of opportunity, most banks give you a window of opportunity to come back and say, hey, I messed up, or that's fraud. We'll return the check, or we'll pay it based on the decision. But it's automatically returned. Great thing with that is, whatever you write out, we're going to match it up. It's a great way to stop fraud. I'll give you an example. Not with a homeowners association, I had actually an attorney, a malpractice attorney. And fraud happened on his IOLA account, which is the worst thing. It becomes a major issue with, you can get disbarred and you have litigation issues and so forth. They took it out of his account, $10,000. I happened to find it came up, and I said, hey, I got a problem. You had fraud. Someone tried to take it. I said, okay, well, you found it. I don't want positive pay. I said, okay, malpractice. This is a malpractice attorney. 6 months later, his own client it's about $50,000 came out. His own client not only took the settlement, but also scammed him out an additional $50,000. Next day, guess what? Positive pay, right? It's a great deterrent against fraud. And then the last thing, probably the easiest thing that anyone could do, where you could set up with the bookkeeper, the board member, the treasurer, whoever you have designated on homeowners associations, or even the account. It's just online. You know, every bank has some type of online. Go to it every single day. If something doesn't look right, if something's coming out and it doesn't make sense, you're going to find out. I mean, on a personal level, I do that every single day. I mean, I'm at the bank all the time. I don't go to the branch, but every single day, I'm checking my personal account for any kind of, you know, if someone can, whether it's an ACH item that you'd never, you know, authorized, or just a check and say, hey, this doesn't make sense. Or it could be the bank. I doubt it's the bank from.
Oh, sure.
It's never the bank. But it's a great way. It's probably the cheapest way, a preventative way. And also, banks can set it up for the accountants as well, that they can also read it, check it as well if you wanted to do that. So there's different ways you can set that up, or you can have it set up for certain security measures. Certain people can read, just check the accounts. Others can do transfers. Others can do wire transfers. But there's different ways that you can set up at your bank for certain security procedures. But those are probably the three best ways of deterrence for fraud.
Thank you, Paul. All right, we did set aside some time for questions. So if you have a question for our panel, feel free. Yes, sir.
In our case, our management company gets the bank statements. We get a monthly report of everything. We have a monthly board meeting with them. To take that job away from them, because we're all working people, those of us on the board, we have full-time jobs. So we're not about to get the mail. We're not about to get the mail and open it, and it goes to the address of the management company.
Yes.
Are we
One
at
of the
risk?
CPAs on the board like to talk
Are we at
about?
risk in something there?
It's basically something I had covered, that to me you are, because they're the ones writing your checks. They're controlling everything.
Oh, we're writing the checks. We get double signatures. We get the response. We get the printouts for what we said. We overview every bill that goes out. So evidently, I mean, they have no control over that. We do. The only thing is, when money's come in, it goes straight to the management company. We don't see it. Okay, we get a monthly statement saying we got in $80,000-$90,000, and then we pay our bills out of that, and we don't have a breakdown of every check that did come into the HOA.
So they reconcile it. They reconcile the account for you each month.
Right, and then we have our accountant that comes in every 3 months and goes over the full account, make sure everything is on the up and up.
Does someone on your board actually look at the bank reconciliation?
We have a banker, president of the bank that retired.
He's on the board.
He's on the board. He's our treasurer, and he runs the statements daily.
Right,
He
so-
goes online, he checks everything in and out.
That's a bank.
So I think we're pretty, that's it.
And you probably have a pretty good set of controls, even though you're not opening the bank.
Yeah, we get a lot of emails from, bankers
Right.
just like email.
But there are things that happen that I don't like as a businessman. We're on the same board. I was told at one point months ago, the president of the management company paid one of our bills with his American Express card because it had to be paid right away.
Okay.
I know you did, but is there a risk in that,
Well, I could say one thing. I mean, if it's done one time and it's not for a large amount of money, I don't think there'd be a problem, as long as there's some, backup for that purchase. You know what I mean? If it's some sort of a repair, small supplies of that
Well,
sort.
that's exactly what it was.
Yeah.
We needed to buy emergency lights.
Right.
It was like $1,400.
Uh-huh.
They wanted cash now. I mean, they wanted it to be
Correct.
paid up front, and then but we needed them right away because we were getting a fire inspection.
Right.
So we okayed it, you know, for him to use his credit card to buy it, and we replenished it, you know, with a check.
But as long as they give you the support, as Rich said, to prove to you that that was a valid expense.
That's exactly
somebody,
right.
and have that person sign that they received the light bulbs, they went to your shed or wherever they went to,
Yeah.
you're okay at that point. We the same, we wouldn't encourage them paying with their credit card for your fees. You should pay that out of your own money.
Right, but they needed, I mean, it was
Right,
an
right,
instant,
it
like a
happened.
thing that had to be done that day when we were, you know, when we
course.
ordered. So it was an emergency thing. We gave him the okay. He did, you know, send out his credit card number, and I mean, it was all covered, you know,
Yeah,
financially.
I don't think that should be a problem, as long as it's not like a recurring kind of item. Right?
We're really unique, thank God. We're on, we have a control board. I mean, we watch what the management company does. We're on them for every penny.
No, I think
I don't
that's
think
the
they
key,
have
like
any-
what Tom was saying, you know, overlooking the
We have one more
management.
question from the audience, and I don't mean to cut you off, but
No.
we're running short on time.
We recently went through a situation where we did go with the district attorney's office, and when we sat with the bank, you speak about 2 signatures on a check. It means nothing anymore, because it's all done electronically. A human being does not see the check anymore. So as soon as that check goes through, you can have 1 signature on it, and it's paid. So that's the situation.
But that's what the board members should be looking for when they look at the bank rec. Does every check have a dual signature, and are those signatures of people on the board? For example,
Well, we
usually.
reconcile the checks.
No. Look at the copy, or look at the actual canceled check. Is it signed by 2 board members? If it's not, then request the supporting documents, make sure that it was correctly expended. I just want to make one quick comment about when Tom was saying about he has board members talk, sign that there's no conflicts of interest. We know of a situation where a property was turning over from sponsor control to board control, and the board president never told his fellow board members that his son-in-law and daughter owned the management company. Well, lo and behold, the management fees were almost 100% more than they should have been. What's even worse, and they didn't use the 3 of us as their accountants, there was no disclosure of that related party transaction in the annual report. And one of the things that banks look for is that they look for this related party footnote so they can evaluate if the expenditures that are being made, if the relationships that are being done are correct. If you're not borrowing money, it's still important. And that's something that you should be representing to your auditors every year, that all related party information and transactions have been disclosed.
I'd like to thank the members of our panel for their attendance. I'm sorry.
Just one quick one,
We
right?
have all this, Frank?
Yeah.
Oh, we have time.
We have time?
For Jim, the insurance, right? Are our outside vendors also covered possibly for fraud? You know, I look at, for example, some of our outside vendors may have access to our internal systems and could create fraud with our
The
accounts.
association's covered, but not the outside.
And not the outside vendor, but the association can be covered. Okay, thank you.
There was another question?
Right, with 2 signatures, yes, I find that's a problem. And the bankers actually told us, oh no, we don't even recognize that, we go right through. And what's to stop the person who is a legitimate signature from signing a second signature on that same check?
Nothing.
Nothing, absolutely nothing.
So that's what they're saying, that it's gonna
No, I'm
happen.
saying the
ladies
banks
and
don't even
gentlemen.
check.
It doesn't matter who cares. The point of it is, it's gonna happen. So what you do is what these gentlemen told you. You look at it every month. Don't be so focused on, well, the bank's I can't take a $500 check or $550 check from my grandmother if she were still living and cash it without like 50 forms of ID. But somebody else can write a check. If somebody else took my credit card, swear to God, Christmas, banged it out on my my debit card. And he did not look like Maureen McCormick. So don't get so hung up on that. Just and it's catching it, because it's only so much they're going to be able to do in 4 weeks. God bless.
A couple more.
I was just going to say, first off, I'm convinced he wanted the points, your property manager.
On his card.
I've actually
Cynical.
I've actually dealt with fraud before personally, and one of the ways I've handled it is every transaction in my account, I receive an automatic text alert and an email alert. So whether the bank can handle setting up 10 or 12 different emails, or there's somebody who sets up a distribution list for all these transactions, both incoming and outgoing of the account. Therefore, if the board members aren't aware of the transactions, immediate alert for them.
Right.
Good point. Right over here, one side.
Yeah, in terms of conflict of interest, the question is the transparency. So if I'm on the board and we need something, Sandy, my brother, for instance, has that skill and is available, as long as it's transparent.
Go ahead. You're saying if you disclose it?
As long as if the board decides he's here, he's ready, the price is right, we bid it out, and is that still a conflict
My
of interest?
colleagues
Or
from Taylor Eldridge would probably say, don't do it.
that's good
If
to know.
there's- if
Actually,
there's
it's
a-
not
if
my
there's-
brother,
if
but
there's
it's
a
another
possible
board member and his brother.
If it could possibly smell of an impropriety,
Right.
don't do it,
Okay.
okay?
Well, I think
Great.
And we as a board in my community have a rule, no relatives' businesses, no relatives of the board member or cousins, no matter how.
What about residents?
No, we don't use
Okay,
any
good,
resident
okay.
or board member.
Great.
Because this way, no one can accuse you of doing
There
anything
can't
with
be
their
any
money.
suspicion of
Even if it was the lowest bid,
Perception.
its
Got it.
perception is reality.
Got it.
Thank you.
Got it. So
another
it's
question
perception.
here.
On the positive pay, who would you have that says if we have a management company, who would be approving it? One of the board members or the managing it?
Well, you can set it up however you want. You can have the board member or the property manager. You can have both. There could be a dual control process. We can set it up, kind of customize it how you would want. Most banks can. And in regards to whether it's dual check, I just want to tell you, I got a homeowners association check that came in by email from my operations department saying there's only one signature on it, and it said needed two. So I had to return it. Unfortunately, it was to a property management company that was a good guy, but it was legitimate, but they didn't. Now, maybe that's random every so often, but it does happen, and I get emails all the time in regards to that. But it's probably it was a bigger check, say $9,000, but it's a matter of doing a whole bunch of things to kind of avoid that fraud to come in. It's a matter of just checking the account on a daily basis. Checking with your account, doing different things, getting positive pay. If it's not positive pay, you just gotta, the checks and balances are important to have. If you don't have it, eventually it'll get you,
one more question.
Just comments. I work for M&T Bank. Bob say the same thing. When you change your board members, and you previously had a board member that was a signer, now he or she is no longer a board member, let your bank know. So that way you have people in control of your account that you want in control of your account.
That's very important. That's very important.
By the same token, online banking password.
Right.
If that board member held a password to access an account and it's no longer on the board, shouldn't have software passwords. They're self-managed, or you're checking your, they do check financial information. They shouldn't have that technical information. All those systems have internal controls in themselves and systems, which will identify who made a particular transaction, who changed a particular transaction. In our dealings with situations where there are fraud, that's very important information to provide the authorities.
I would say one other thing, but I know it's tough because I understand your volunteers. So it's like a second job to you. It's probably more of a job. But you kind of want to change up at least the treasurer every so often if you can. I know you got 2-year terms, but you want to keep, if you want, I don't want to change anything, but
That's how we get paid.
yeah.
One more zero, right?
Right.
You mentioned something which I wasn't aware of. When you void a check,
Right.
why do you want to save it rather than shred it?
Well, I guess you can do it either way.
Oh, okay.
But I tend to think because of, the order of the numbers on the check, so sometimes if you physically have it, if there's a gap in the checks, at least for that year, you could see the difference. But I guess after a year or so, after the audit's been done, you could potentially shred it.
Okay.
Christine, there's another point that just like interject. If there is a case ongoing right now where an individual ordered a duplicate set of checks, holding on to the void would be important in my mind. Because if if a duplicate numbered set of checks were out there, that check would go through, and you'd have no trail to recognize the first issuance was voided and the second issuance may have been fraudulent.
Unless you had positive pay, that would be.
Just saying.
Who sells positive?
I'd like to
Yeah.
thank you all for
Is
coming
that
this
conflict
evening.
of
Turn it
interest?
back over to
Perception?
Frank. But before we do that, can we get a round of applause for our panel?